Hey, good morning, everybody. It's Hammer. Today is Wednesday, October 15, 2025. I, of course, am here with Around the Water Cooler with Hammer. That's what we're calling it today. How do you like that? Let me know in the comments. I, of course, am Hammer, founder of Originator Success, Grab and Go Social, and Rate Sensei. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and on YouTube. We'll add some more eventually, but for now, that's where we're at. If you're here this morning, say good morning. If you're watching on the replay, go ahead and give me hashtag replay in the comments. Let me know that you were here. If you want a reminder so you don't miss us at all, you can go ahead and sign up. I send out a quick text reminder that I'm going live each morning. You can sign up to receive that absolutely free, hmmr.io/reminder, or use this cool QR code over here, and we'll get that over to you. And get you on there and all dialed in. So if you like that, check that out. Today, we're going to be talking about Powell's comments yesterday. Wasn't a big deal. Wasn't a big market mover. But some things that are kind of hidden in there that we want to go over, especially about the Fed's balance sheet. And then we're going to talk about some scumbag attorneys in Optimal Blue. I don't know if y'all have heard there is a lawsuit against Optimal Blue, a class action lawsuit. These attorneys, man, I just disgusting. It's just gross. And then Zillow and ChatGPT integration. It's getting a lot of press. My buddy Jason Frazier there making a big deal out of it. I really want to know what you guys think and if you think it's actually a big deal. I don't really think it's a big deal. So that's what we're going to be talking about today, and we'll have some fun with that. Don't forget, smash that like button, tag a little friend, subscribe, share this post in a group. Your comments are what drive my engagement. I want to hear from you. In fact, I'm going to throw this up there. I think I'm going to come up with a short code. How would y'all like to join live? Right? I think I'm going to start having a session for the last couple minutes where people can join live and talk a little bit about what they are thinking. So that's the link. I'll throw it up there again in a little bit. But if you want to join live, hey, I should even have people call my cell or something, calling in. So anyway, while that's all happening, let's go ahead and say hi to all the live folks here this morning. So many of you that join me each and every weekday morning. Appreciate you. Ron Siegel, I need to know what the heck a shawarma is. It sounds like one of those fuzzy blankets that Austin promotes on TikTok. Somebody help me. What is a shawarma? Tiffany Teal, good morning. First to say hello this morning. Brandy Brickler, great to have you here, my friend. Mike Brown, good morning. Mallory Fotiatis, good to see you. Monica Dinkins and Michael Love, hello. Bill Stevens, what's up, man? Great to see you, my friend. Leroy Romero, good morning. Ron Siegel says, today is National Shawarma Day. Somebody needs to tell me what the heck a shawarma is. Again, I think a shawarma is one of those fuzzy blanket robe things. That's what like a snuggly. That's what a shawarma sounds like to me. Matt Rasner, good morning. Rob Stewart, Angela Walters. Great to have all of you here. If you're here this morning and I haven't said hello, say good morning. Let me know that you're here. And otherwise, let's go ahead. Let's get started, get into the good stuff here. And get on with what we got going on here. So I'll throw the lock advice up at the bottom of the screen. Let me share with you what we got. We're going to start with what's going on with rates and pricing in the market. This morning, mortgage-backed securities down a whopping basis point. So that means they're flat on the day. Really no change. If we take a look at where things are at, there's really not much. Quick recap of what happened yesterday. Bonds got a small boost. Let me hold on. I gotta change the size of the window so I can. There we go. Okay. All right. Oh, and now I got to refresh it because it won't let me. All right. So, let's zoom in a little bit here. Boop, boop, boop. All right. So you can see what it comes down to yesterday. Powell was talking right here. This upward trend, this improvement that we see right here. This is when Powell was talking. So pricing came out yesterday. It was right around here, but pricing came out, we were around 101, 101.02, right? So we'll call it 101.02, 101.02. And then afterwards, it went up to 101.09, 0.10. So you're talking a whopping 8 basis points here. Really not enough to get super excited about. that's why there really wasn't that big of a thing. So, but bonds did get a little bit of a boost. They did get that little bit of a boost right here, and they're holding on to the gains this morning. Again, we were right here when pricing came out yesterday. We're up here this morning. That should give us a happy little smiley face, right? A handful of lenders did reprice better. Let me know in the comments if you got to reprice better or if you happen to see one. There were a handful. There were a few. There weren't a lot, though. And then basically it means that rate sheets this morning should be slightly better. But rates really are continuing to show some hesitancy from improving. And let me move this over here. There you go. So, I mean, taking a look, 6.31. When we compare that to where we've been recently, you're looking at, 6.38 was a little bit higher, 6.32, a little bit of improvement, 6.31, but still very much 6 3/8, very much in that same range that we've seen. Rates really, really struggling to improve. When you look at the Japanese candlestick chart, you can see here that we're kind of holding into this range that we've talked about before. Right here, when it's a red candlestick, bonds are starting the day a little bit above it, but ended the day at the bottom of the candlestick right here. So within that range. This morning, we're still in that range. Not really seeing bonds break above, 101.10. Right now we're at 101.08. So you're not seeing much movement there. 10-year treasury yield, 4.01. Were the threes in the cards? Not really. We need to see something happen to drive rates into that direction. So, but reprice risk on the day is low. Bonds are starting the day. We're right here. There's really not a lot happening. We got some more Fed speakers today. Of course, the government shutdown. We would have gotten CPI data today. However, remember the CPI data, it's basically not coming out because the BLS the BLS, Bureau of Labor Statistics, is closed. It's not an essential section. However, the CPI is going to come out. Remember, it's 10/24. Friday, the 24th, it will come out, government shutdown or not. It'll come out regardless. It's needed for COLA. COLA is the cost of living assessment, the cost of living increase basically, but the cost of living assessment for Social Security. So we will get the CPI regardless of the government shutdown, but that was supposed to come out today, not coming out. So basically we just got a regular, drifting. You'll see the lock advice down at the bottom of the screen. I'll put it up here as well. Little urgency to lock at the moment. It's unlikely we're going to see rates move much lower. We're seeing small improvements to pricing. That's George's tail that you're seeing right there. He's hanging out on the desk. George, come say hi to everybody. Stop being a pain in the neck. Hey, say hi. So we're seeing a small improvement on the day. You're seeing a chance for some small improvement overall, but really not seeing rates improve. Remember, when it comes down to the outlook, rates don't really have much room to improve. When we look at where they were before, it's a change of minus 0.01. A week or a year ago, we were at 6.13, or the 52-week range, rather. So the range over the last year, we're not as low as the lowest that we've seen, and we're definitely much better than the highs that we've seen. About a point better than what we saw here. And if we remember, let's go ahead and turn these off. That was right before, we'll do 1 year. That was right before the, there it is, the September meeting. So last year, it's funny, we need a little bit more than we need to, let's bring this to, here we go, September. All right, so actually, let's give us a little more perspective. Let's bring this all the way through to July. There you go. Perfect. July 1st. All right. So you can see, if you remember last year, rates were improving, dropped all the way down. We hit the bottom right here at the Fed meeting. That was when the expectation was that we were going to see a 0.5 point rate cut, and then we ended up seeing 2 quarter-point cuts after that. And they were priced in. But remember, there was a lot going on with the elections back then. Rates shot up which was bad. So we're much more stable this time, much lower, much more stable. We have seen, if we go ahead and let's move this to, let's do 2025, and let's take a look over the last few months. Right, we'll do June 1st. So there we go. So I mean, you can see we were much higher up here. We did get a little bit of a blurb lower right here as we got that Fed meeting. And after the Fed meeting, we've popped up, but we've really just been very flat. There's really not much of a change here. You're talking 6.37. Right now we're at 6.31, so it looks better than it is. I mean, look at that. We're really, but we did tweak a little bit below that, so that's exciting. We'll keep an eye on it. Markets are still pricing in 2 more Fed rate cuts, and that's what we currently expect to see. You got a cut in October. It's almost a guarantee, 97%. December expectation in the high 90s. January, though, markets are looking at, hey, do we want to, are we going to? It's a 50-50. It's a coin flip on whether we see that. So this is part of the reason why there's not a lot of expectation, why rates don't have much room to improve, because we're already pricing in 2 more Fed rate cuts this year. We're pricing in the chance that by the time we get to March, this is a 75% chance of a rate cut by March. So markets are already pricing that in. If we start to lose ground on this, that's going to push rates worse, not better. So keep that in mind. Ron says, no one ever accused me of being stable. That's true, my friend, but that's okay. But my crazy is fun. So, all right, well, let's go ahead and let's start first. Let's talk about shawarma for a minute, since today is National Shawarma Day. Has anyone ever had shawarma? That is my question for you. Ron says shawarma is a marinade of Mediterranean herbs and spices. Shawarma chicken slowly cooked on a vertical rotisserie spit. The tender meat is then thinly sliced, grilled, and added to a pita wrap with a variety of toppings. Sounds yummy. Sounds like I like Mediterranean dishes though. So who else likes Mediterranean food? Let me know in the comments. But let's go over what I want to talk about today. So we did the rates and pricing thing. Let's talk a little bit about the balance sheet and what happened with Powell yesterday. So Powell was talking about, I don't want the balance sheet run off. I want Powell first. Let's see. Here you go. All right. So Powell says the Fed may stop shrinking the balance sheet in the months ahead. Again, when Powell spoke yesterday, you could see that right here. There is, just a little bit of improvement right here where he spoke. We saw things improve just a little bit. And the reason that we saw that was because he acknowledged that we're likely to see another cut, which again, markets have already priced it in anyway. But what was hidden in here and what got more of a reaction wasn't the fact that he signaled that the Fed would cut, because markets had already priced it in, as I've said like 6 times now. However, he talked about how they would stop shrinking their balance sheet. That is called quantitative tightening. And that's, the Fed is still selling off mortgage-backed securities along with treasuries. And this could help rates a little bit, because rate sheets are a reflection of bonds. Bonds move with supply and demand. So if the Fed is putting less supply out there, the demand that's there could improve the pricing of what we get. So that's why you saw a little bit of improvement in mortgage-backed securities, with the idea that the Fed may go ahead and stop with their balance sheet runoff. Prolonged funding pressures in U.S. money markets, just as bank reserves held at the Federal Reserve are dwindling, suggests the central bank may be getting closer to ending the unwinding of its massive portfolio of securities. Overnight funding markets, where banks and asset managers borrow and lend to each other on a day-to-day basis, have been volatile since the beginning of September. Ultra short-term interest rates, which have been steadily rising as the Treasury is rebuilding its cash pile, remain stubbornly elevated even after a benign quarter ended. As a result, the gap between the secured overnight financing rate and the effective Fed funds rate is near its widest level since 2024. Meanwhile, bank reserves fell just below $3 trillion. Remember, what happens is banks lend and borrow from each other overnight because they have asset requirements that the government have put on them. Fed Chair Jerome Powell said last month bank reserve balances are still abundant and have yet to reach minimum level needed to cushion against market disruption, although he acknowledged they're getting closer. Fed Governor Christopher Waller earlier estimated that level known as ample at $2.7 trillion. And with market metrics showing the funding costs are getting tighter, market observers say that level is fast approaching. So they would basically stop with quantitative tightening because they're looking for more liquidity, and it's a lot to explain all at once. But this, bottom line, this is good for rates and pricing. We could see a little bit of improvement from this. Fed officials have since 2022 been winding down the central bank's balance sheet process known as quantitative tightening, reversing trillions of dollars of asset purchases designed to stimulate the economy after the pandemic. Earlier this year, the Fed slowed the pace by reducing the amount of bond holdings it let roll off. But they did that with treasuries. They kept the mortgage-backed securities being the lion's share of what they're continuing to sell off. The minutes of the Fed Open Market Committee on September gathering due Wednesday could show where the central bank stood on. When was this article printed? Because this is from October 7th. That's why this was an old one. So those meeting minutes, we already got them. But Powell reiterated yesterday, which is a week later, about the balance sheet runoff. So that's why we saw a little bit of improvement on there. Another thing that we wanted to talk about today, scumbag attorneys and Optimal Blue. Have you guys seen this? This one really, really pissed me off. Optimal Blue antitrust case draws parallels to commission lawsuits. So they're putting this, and I'll give you a parallel to the commission lawsuit. It's a bunch of garbage. It's scumbag, douche nozzle, ambulance chasing attorneys. The new class action lawsuit against Optimal Blue. Do you know what it's like to run a company and build a company and then have these scumbags come in and basically just cost you millions of dollars? Mirrors the RealPage and real estate commission lawsuits, alleging lenders used the firm's pricing software to coordinate mortgage rates through shared data. That's exactly what it does, so that we can help consumers. We're getting pricing amongst different engines. What they're trying to say is that this allows lenders to get together and fix pricing because they can see other pricing. You don't need Optimal Blue to do that. Algorithmic collusion and information sharing, driving up consumer costs across the housing market. Does anyone think that Optimal Blue drives up consumer costs? When you get crappy pricing from UWM, it's not because of Optimal Blue, right? So how many of you guys believe that does anyone feel like this is actually a thing, that Optimal Blue helps lenders collude on pricing and screw consumers? I'd love to know. I mean, I promise I won't make fun of you hard. I might make a little fun of you, but I won't make fun of you hard if somebody does that. An 81-page complaint, because I love how this whole thing was filed by 4 homeowners. 4. Which they're not even 4 real homeowners. The attorneys found 4 people to put their name on the lawsuit because they promised them money, who used a mortgage to finance the purchase of their home. The suit is seeking class action status, includes anyone who purchased a home since 2019 with a residential mortgage that was priced, originated, or sold by any defendant using Optimal Blue. So now you could be wrapped into this just for using Optimal Blue. What kind of crap is that? You guys aren't commenting. Do you guys not care about this kind of stuff? I'm looking at the numbers. So let me know in the comments how you feel about this. I figured that if we talked about this, some of this water cooler stuff, you guys would actually comment on it. So if you're not commenting on it, then I won't bother. Let me know what you guys think about this whole Optimal Blue thing, though. Ron Siegel said if Optimal Blue is guilty, so is Google, any AI, and anyone on the internet. It is a great point, dude. And I find these to be a frivolous, ridiculous lawsuit. Hopefully it doesn't go far. And then the other thing I had a question for you is, do you guys think the Zillow Chat GPT thing is a big deal? Angela said that's insane. I agree, Angela. It's just ridiculous. It really is. It's attorneys. It's the new it's the new ambulance chasing is what they're doing. Bill Stevens said brokers using Loan Sifter to help their borrowers get the best pricing. Yeah. I mean, it's funny because Optimal Blue, look at this. Optimal Blue even shares all their information publicly. Like, this is a free widget where you can see what people are locking in loans at. Basically, we haven't seen, they're about an eighth of a point lower than right after the Fed meeting. But, that you don't know, this doesn't include any points, though. So we don't know what the rebate pricing is in the locks. Yeah, you guys, there you are. Now maybe I'm just delayed. Now you guys are commenting. So I got you. Deb Dickinson, it's dumb. You agree with Ron. Brandy, it's actually insane. Amy, thank you. I said it best with the attorneys. The suit is bogus. What about non-captive insurance agents? Are they next? If they can get money from them, they absolutely will be. Sounds like another McDonald's coffee lawsuit. Yeah, it seems like so many of them are. And by the way, the reason, do you guys know why these class action lawsuits have gotten to be so popular? It's like a venture capital. They're being funded by Wall Street. What happens is to do a large scale lawsuit like this, where it's class action, from what I understand, it takes a tremendous amount of upfront money to build the case, get it out there, advertise for, you've seen advertising like for Roundup and all these other things. So there's a lot of expense. And what's happening is Wall Street is funding, you have venture capitalists that will fund these lawsuits. And they know if they fund 5 of them, 4 of them might not go anywhere. But if one wins, it's going to win millions and millions and millions and millions of dollars, maybe even billions of dollars. And, what are mortgage people going to get on this? $8, but yet the attorneys will make a tremendous amount of money. And out of that attorney cut, venture capital makes money. That's why these have become the big thing. I agree with you, Ron. Need to move to the European model where the loser pays the winner's costs and stop some of these frivolous lawsuits. Absolutely. Giddy up, Randy Teakle. Appreciate you, sir. So last thing that we were talking about today, it's down at the bottom. Let's see, let me pop it up here one more time. Last thing that we were going to hit was the Zillow ChatGPT integration. We're at the end of today, so we'll kind of talk about this tomorrow. Come back and we'll talk about this a little bit more tomorrow. I would like to know what you guys think, if you think this is a big deal. So tomorrow we're going to discuss more about what's happening with rate sheets, the government shutdown, if it's having any effect on mortgage. We'll talk some about the ChatGPT integration thing with AI search, and if you can get loans from AI. That's what I'm going to be hitting tomorrow. So, of course, we'll be talking about rates and rate sheets. We're going to get into the government shutdown. Let me know in the comments, do you guys like this format? I want to stay to about 20 minutes. We're at 23 right now. I want to get these to about 20 minutes, but let me know in the comments if you like this. Other relevant industry data, not just rates. I kind of want to get out of my rate bubble on the live a little bit. To me, like I said, this is the water cooler. This is where we get together, talk about what's going on. You guys can join, maybe get, you guys don't all have to subscribe to all these services like I do with Inman and Housing Wire. So you don't have to spend all the money on all these things. And I'll share things with you. And let me know in the comments if you guys like this format, because I want to know whether I should continue to do it and kind of build out on it. So would love to hear from you, and put it in the comments and I'll look for it. Otherwise, I'm wrapping up for today. I'll see you tomorrow. We'll get into that ChatGPT Zillow thing and we'll get into all the good stuff. All right, everybody, have a fantastic day. Bye-bye.